But first, if you're feeling the pinch in your pocket at the moment, you're not alone. Inflation is hitting the wallets of everyday Kiwis. It comes as the official cash rate rises. It was 0.25 basis points. But could there be bigger hikes to come? Are we going to see bigger chunks taken out of your wallet? Joining us now, Reserve Bank Deputy Governor Christian Hawkesby. Good morning, Christian.
Morena.
So you did 0.25 basis points. Should people be worried you're going to do more than that in single increments? In other words, could we see mortgage rates go up really quickly in a short period of time?
We think we are in an environment where interest rates are rising and will be rising into the future, and it's really a message that we've been giving since around the middle of last year, where we've started to have increasing confidence about the resilience of the economy. We don't think the economy needs the emergency support that we provided, in response to initially with COVID, and we're really in the process of starting to remove that. We've taken 3 25 basis point moves and the official cash rate higher so far, and our projections are that there is more to be done.
But normally you do it in 25 basis point increments, right? Are you going to do it? Are you going to do 2 at once, so 50?
We're leaving our options open. We think that we've got some work to do ahead of us. We think interest rates do need to move further, but we have the luxury that we meet every 6 weeks and consider the outlook. If the outlook changes materially, we're not ruling out moving in larger increments.
Okay. Let's talk about inflation. Is it your view that it's largely imported inflation?
Well, there are big aspects of inflation that are imported, and the real classic one is oil prices that have risen very sharply over the course of last year, and that really is sort of baked into the inflation numbers that we see now in front of us. What we are seeing, though, is more generalised inflation too across the economy, across consumer prices, and that's really what we're responding to. Our mandate is to make sure that we have low and stable consumer price inflation, and that's why we're lifting interest rates, because we think that there is growing inflation pressures there that we need to lean against.
What's driving that generalised inflation?
Well, it's really the capacity pressures in the economy. So if you roll the clock back to when COVID initially struck, our concern was that there would be a deep recession and lots of spare capacity, and actually the chance of deflation in our economy. As it's turned out, the economy's demand has been much more resilient than we expected. We've got through it much better, but also supply constraints have started to come in and be much more prolonged. So we're seeing those capacity pressures. We see it a lot in the labour market. We think unemployment's at a record low, the labour market's tight. These are conditions where we can start removing that stimulus and getting back to the sort of business as usual of interest rates going down and up.
We've got time for one more word from you this morning, Christian. How sure are you? You project about 9% property value decrease over the next, say, 2.5 years. How certain are you of that number?
Look, there's a real wide range of uncertainty about that. What we're most certain about is that house prices have been unsustainable over the last year or two and have been disconnected with what we think the fundamentals are. We have seen 2 months now of house price falls, and some of the things are falling into line there. Particularly the record residential construction, which is really bringing in a lot of supply into the housing market. Also us increasing interest rates too. So we think that there's a good chance that house prices do fall in the period ahead.
But not absolutely crash, which is quite crucial, isn't it? Hey, we have to leave it there.
Yeah,
Christian,
there's
thanks
a
so
wide
much for your
range
time
around
this
that.
morning. Deputy Governor of the Reserve Bank, Christian Hawkesby, this morning.